Hello traders, Gary Wagner here. It is approximately 12 noon in Honolulu, 6 o'clock in New York on Friday the 16th day of March 2012. And this is the daily report for gold and silver, our weekend review. Before doing a review on the week, I do want to update us on what we are looking at today. We had the metals slightly higher, nominally higher today. Currently, we are closed at $2.80 higher on gold. As you can see, current print on the day is 1659.71. Kitco shows the close at 1661.10. Ask 1660. Bid up to 80. Silver up 2 cents higher, 32.66. 32.56 on Kitco, and you can see on my screen 32.51 closing price on silver. In terms of a review of the week, at the end of the week we did take a stab at the precious metals markets. Precious metals markets, as you can see, they were rising right in here. And I did have a stop. That stop that I had initially was below these lows to protect us. However, when we failed, as you can see, this failure here, what I realized was that we're probably looking at what's called a truncated B wave. And when you have a truncated B wave, you'll go right into the C wave. So my directions to our traders were that any kind of a break below this particular line right here, 1688, 1686, in that area, to exit the trade. So we did get in the trade roughly at 1700. We got out at 85. We took a $15 loss on the trade. Similar activity in the silver market. As you can see, we had an utter and complete failure of this fifth wave. Your B wave. Your B wave will typically go between 50 and 75% of the move that you saw in the A wave and then come down for the C, but we had a failure. So we exited both of those trades with a small loss. When you compare it to the win that we had on the first trade, it's a drop in the bucket. However, as this market came down, and this is kind of what we're looking at right now, and that is we had no doubt our A, we had a failure on our B, but we did have an adequate B wave, and then we had our C down. Once we had our C down, we were looking for a couple of parameters, and the basic parameter was it going to find some kind of support at this 61% level? Now realize the 61% level is a level from really the beginning of this rally here. Let me go ahead and blow that up. As you can see, we're measuring it from the beginning of the rally, which took place in December of last year, to the top. And then when we look at it that way, you can see this was our C wave here. We went into an impulse phase. 1, 2, 3, 4, and our fifth wave here. And then we had our ABC correction. A, B, and C. Now this C should have completed our second wave, which means that we are going to be going into an impulse or primary impulse wave number 3 at this point. Now, of course, our daily viewers know that we did issue a buy signal yesterday in the metals market, specifically in gold. We have held off on silver. We will probably be issuing a buy signal in silver Sunday or Monday. Daily viewers, stay tuned on that. However, here's what I'm noticing that's interesting in terms of finding support in the market. When we look, for example, at our gold chart, this is a 1440 or a daily candlestick chart in gold. If we're going to go under the assumption that we have actually found support and completed this wave 2, what I find interesting over the week's trading is over the last 3 days, we have taken individual stabs at this low, and each time, whether it is short covering or bargain hunting, buying the dip mentality, each time that market went down and tested these lower areas, we found really pretty strong support because, as you can see, these lows down here were never to even come close to any of our closing prices. Here we closed near the lows. Here we've got a green candle, meaning the open is down here. It closes up here. And as you can see, although it closes a little bit higher, it's a small red candle. Very, very quiet activity as we went in towards the end of the week. You can really see that on a 720-minute chart. This 720-minute chart is of gold. It is in Japanese Henkin format, meaning Japanese average format. And it's quite clear that we've had this real quiet activity right here in terms of the open and close. But when you look at the highs and the lows, you can see that we've really had some sort of a range, testing some of the highs here, unable to take out the highs, and here, unable to take out the lows. Now, silver, although it has been a little bit slower to shine, it does look like it has found support, not at the 61% retracement level as gold, but really at the 50% retracement, roughly at 31.88. I'm showing some pretty strong support in this market right in here. We talked about this, daily traders, a little bit yesterday, and that is that piercing line. Now, when you have this long kind of a drop here, you're not going to get to the midpoint unless you have an extremely volatilely upside day. But this is certainly turning out to be a valid signal in terms of a pivot point and in terms of where we think this market might be headed, which at this point, I believe next week we should see higher prices. When we take a look at the big picture, this was that last strong impulse wave up. That would be wave number 5. We get our A, our B, and our C. This should conclude our correction. 50% of the move is given back, and that would mean that if we get confirmation at the beginning of the week, we're going to re-enter an impulse phase in both gold and silver, meaning wave 3. Where is wave 3 going to take us? Well, that's quite interesting because typically when you look at Elliott wave charting techniques, wave 3, simply put, cannot be the shortest of any of the impulse waves. Now, we've already had our wave 1, that wasn't wave 5 before, but our wave 1 here. This ABC is wave 2, and this will take us into wave 3 right here. Wave 3 should be equal to, if not greater than, wave 1. The move that we saw in wave 1 is a tremendous move to the upside when you consider 1520 up to about 1790. That's a sizable move, and that would be if in fact this follows Elliott wave forecasting models and we see this market trade in that manner. We are going to see a tremendous rally building over this next couple of weeks, which should take us over the next couple of months, meaning it's quite possible that we have seen gold and silver prices bottom, and we are into a marketplace which could in fact take us to new highs. And why do I say new highs? Well, let's consider it this way. What I'm simply going to do is to draw a scalable line which will take us and show us what this particular rally, this last rally that we saw, and then we're going to extend that to this wave. So if wave 3 is equal to wave 1, just equal, and it shouldn't be shorter unless it's truncated, and traders, that can happen, but that would take this particular next impulse wave to the $1,900 range, and that's fairly sizable. That would be a tremendously large move, and it would be an incredible third trade of the year if we could catch even 50% of that move. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.